Another minute, another speaker to bludgeon you with slides. My name's Tim, I'm from Argus Media. If you don't know who Argus are, we are a industry watcher. We produce intelligence, we produce prices and costs which people use to benchmark their trade, in most notably for WTI, but also in steel, in fertilizer markets, biofuels, chemicals, all around the world. So, I'm fighting the acoustics here. I hope you can hear me okay. Good-o. And I'm also fighting myself because I stupidly did 18 slides for a 15-minute presentation. So there are no questions available on stage. If you want to discuss anything on here which I've skipped happily past, I'm going over to our booth after this, just in the main area. So please come and find me if you want to chat. Let's get going. So I wanted to give a quick look through on three key areas: costs, how are projects doing, and then snagging issues that I see in this industry, this to-be industry. So I thought I'd start off with, I'm going to move to the center because my eyes are terrible, production economics. And first thing to say, obviously, is that the US is a great place to produce hydrogen. I've zeroed off the USA on the far left of that chart. Everyone to the right of that is producing at a higher cost than the US. So the US is in a great spot. It's nowhere near its $1 target, that moonshot target that's been announced at 570, but one day we might get there, but still it's not in a bad position. And in fact, there's very few people, or countries I should say, that are able to hold a candle to the US in terms of their production costs. The only one that has a material advantage is really China. Everyone else, that's a very contestable difference. So there's not much in it. There's not many people that can do better. Now, low hydrogen gas prices, production-wise, for low-carbon hydrogen is one thing, and it's kind of a national thing. That's really good for industry as it transitions to low-carbon gas use. But if it's going to be for exports, then obviously it has to be transformed into liquid organic hydrogen carrier, liquefied, or transformed into ammonia, which is something that a lot of people are doing. So it's worthwhile looking at how those production economics stack up for ammonia too. And once again, it's low on the cost curve from the US. So if it's being exported over blue water, a lot of people are looking at ammonia. You can see how high that ramps up elsewhere and why people in particularly Japan and Korea are so interested in importing green ammonia from America and other areas too. But all ammonia isn't just green or grey, there's also the blue side as well. And that's where we see America having a very deep advantage relative to others. It's worthwhile noting that cost is not the sole consideration for import partners. So that may rule out some areas that are lower on the cost curve. It's also worth noting that for some that are lower on the cost curve, these are outright production costs that I'm using here. They don't take into account IRA, whether 45V or more prominently 45Q for the carbon sequestration. It's also worth noting as well that some of those competitors that are to the right-hand side, these are all using spot prices. So in the case of the US, it's Henry Hub. But it's also using spot prices in the Middle East. And what you see in the Middle East is there are lots of countries that try to attract inward investment into, let's say, fertilizer production by offering long-term gas incentive prices. These aren't those. We're about to launch those, I think, next week, so that'll give a view for anyone that's interested in what those are like. So, a quick overview of, that came out horribly on this screen. I don't know if it's as ugly colours up there. I wanted to have a look at what's happening on the project progression. Last year we put this slide together, and I'm a great believer in recycling, so I've used it again. The point is really just to make the point that, look, the targets are grand, but as you move through feasibility towards FID and operation, those grand targets stand on thin legs. The progression hasn't happened very rapidly, which is a surprise to people. If you work in hydrogen, you know this is happening. Lots of people think, are we there yet? No, we are not there yet in terms of production or anything like that. So that's looking at the electrolyzer targets and how we've progressed through those. This looks at low carbon targets, so basically your blue materials, your blue hydrogen, your blue ammonia, etc. Now this is thicker as it goes from target down to feasibility onward, and obviously there is some progression, notably in the US, for construction or FID. So that's more reassuring in some ways. those are the look backs that I did last year. We just did an update, a refresh, covering a lot of the world, not all of it. We just did that large block there, Australia, India, UAE, etc. Greater Asia, basically. Now, the people who have the cup half empty mentality will quickly note that it's only 12.5% of projects within these countries have hit FID or gone towards construction. And that's not a lot. That's 200,000 tons. So that's very small. I used to work in the steel markets. You know, that's a single very large ore carrier. So, you know, what do I care about 200,000 tons? But I would say that there has been good progression, not great progression, but you're starting to see that progression through. So you're seeing the feasibility there. You are seeing in this area, as I say, 12.5% past FID. So it's not as bad as it was last year. You're seeing things come through, but once again, we're kind of waiting for things like clarification on 45V and others, in the US particularly, for people to feel comfortable to press the button onto FID. Just looking at it from another way, we collect lots of data. One of them is a good proxy for how projects are progressing, is how many electrolyzer orders. Obviously, that's for green hydrogen projects. Look, humans like to spot trends, and you might think to yourself, this is great, I can see an upward trajectory. Don't get excited. That's just what it looks like. This goes back to 2021. I think in May there was one for 2 gigawatts, and there was one for 2.5 gigawatts before this, so there's no clear trend here. It's patchy, and it's quite tough to run a business on electrolyzers when the orders aren't forthcoming. But we live in hope that that will start to happen. And somehow I'll come through to this next part, snagging and opportunities. So before I was just talking about, you know, economics. I was talking about how projects are progressing towards actually producing some low carbon materials. I think on the policy side, it's very hard to encapsulate what's happened globally in a single chart. It's almost impossible. I had a go, and I'm sure I failed. But on those first 6 metrics, we have seen good progress. So production support and demand support, you're seeing solid progress throughout all of these. The one area which has received very little attention actually is in structuring offtakes. And the reason for that is that those first 6 fall very much within what government feels is its wheelhouse. You know, the government feels really good talking about, you know, subsidies and things like that, certifications and how to set the boundaries of quality competition. These are things that everyone feels very happy talking about. Less so when it comes to the dirty business of commercial sales and things like that. So you've seen less discussion around that. And I think to some degree the industry has, it would benefit from looking a bit more at that. And the reason I say it's worthwhile to think about is that this isn't the first market to go gangbusters for a huge scale up. LNG, everyone knows about LNG now. What you may not know is that I think it started off in 1964 was when it started to be discussed. Now, it was only since about 2012 that it started to really start to scale. So that's a long time. And what I'd say is that I've got that little box there saying the hydrogen market's here. So the LNG market was very similar to the hydrogen market actually, because people wanted to price LNG, but there is no LNG, so how do we price it? So does it sound familiar? It's something that everyone's seeing again today. So what people had to do was they had to look at proxy-based pricing. So they couldn't do LNG-based pricing. There was no spot availability. It had to go into offtakes and things like that. Couldn't do it. So their options really were to go for gas-based or oil-based. You know, these are deep liquid markets that people understood. So people went off, and the participants in the LNG industry went and had bilateral, opaque discussions, trying to structure their offtakes, and they did it by gas or they did it by oil. And so we ended up with this situation on the right-hand side where we went from what was a homogeneous market, people were all talking about LNG, to a very fragmented market where people might be basing their pricing for LNG based on gas, and that could be off TTF, could be off Henry Hub, could be off NBP, could be any number of gas references, or they were doing it off oil, whether it was Brent or Murban, etc. And now actually since 2018, people have been trying to restart a direct pricing on LNG. So from a very homogeneous market, we ended up at the end with a real mess in the LNG markets. From where I stand, I would say that hydrogen can take a lesson from what happened in LNG. And I think that if people are thoughtful and mindful about how they structure their offtakes, and this is a very relevant discussion right now, because before you get to FID, you need an offtake signed, unless you're Neon and you have infinity money available. You need your offtake down. And we have provisional offtakes which have been signed. These have to be translated now into firm offtakes. And how is that going to happen? A lot of people are looking at sort of constructing Excel sheets and using the price of gas, price of power, price of carbon, etc., the price of freight. All these kinds of things are going into them. But that doesn't really help the market to stay homogeneous. All that does is put each buyer and seller into a little room, and no one knows what that buyer and seller have done really. Now that isn't great for a number of reasons. As I say, it doesn't help the market to develop in a transparent manner, and it doesn't help to provide a clear market signal. So when we talk about somewhere like Japan or Korea, for example, they do want a clear market signal. You don't want to be creating a bespoke offtake agreement when you don't know if your competitors have done better than you or not. And you won't know because everyone's in their little tiny rooms. You've got no idea of knowing. But it really matters because in commodity industries, in commodity transforming industries, whether you're transforming something into power or something else, margins tend to be quite thin. And so it really matters whether you've got a good deal or not. And the way that most people do that in most other markets is to use benchmarks. You know, you can see how close you are to the market. On a daily basis, you can see how well you're doing relative to peers who are buying the same kinds of things. And this market would undoubtedly benefit from something along that line. And not just in the now, because someone has to administer this. So one of the reasons that the US to Northeast Asia leg is so interesting is because the US has the production subsidies, and say, for example, just using Japan, they have the demand side subsidies for CFDs. So you've got that lock in there between the supply and the demand. But as I say, it's going to prove very challenging to administrators of that if every single time they have to work out how much subsidy is available, they have to go and consult an Excel model somewhere. Benchmarks are really useful for market efficiency. We have something launching next week, which I think will be interesting for anyone involved in exports out of the US for hydrogen products in the form of ammonia. As I say, Northeast Asia really stands out as a first mover, as a region, to be taking low carbon products, and that's really in the power generation sector. But that power generation sector, it is very price sensitive in terms of what it's looking to achieve. What you have in both Japan and Korea, they have different ceilings for carbon intensity of products being imported. They are different, but they form a ceiling. And so any rational actor in a cost-sensitive industry is going to look at that ceiling and say, I have to come in below that, and what is the cheapest product? Obviously on those slides way 14 minutes ago, I was showing the delta between green and blue ammonia. It's really significant. And so obviously you're going to look to blue. You're also going to look to partners that you can rely on over the long term, because these offtakes are going to be 10 to 15 years. So a lot of roads point to the US, and then obviously the US is really low cost as well. So we can expect this to be the route that really takes off. We're launching a low carbon ammonia offtake mechanism. Next week, as I say, it's a landed Japan or Korea number. Its origin is the US, Gulf Coast, and it's using autothermal reformation with CCS, wrapping everything all up into one. So that includes your gas, your power, your carbon sequestration, which you also get a credit for in the 45Q, freight, all things in one. And we think it could be useful in helping to maintain homogeneity in the market and to set it up for the next leg as it transforms to spot markets. We are literally out of time. I hope that was fun. If you want to discuss any of that, I'll be over at the booth with my cards and everything. Thank you very much.